morning, traders. Welcome to the morning update. It's Wednesday, the 21st of February. My name's Mark Owen. We're going to have a run through the news today and look at a few charts, see what potential opportunities there are. Yesterday was a very, very flat day. There was nothing to get involved with, although I know that's the hardest thing to potentially do as a trader is to stay out of the market. It's one of the most common flaws that I find that people just want to stare at the charts, and there's always a reason to find a trade. So following on what's been a very, very good month here for Phoenix Blue and our team of traders, the last thing we really want to do is start handing money back to the market, and that's the easiest thing to do. This week there's not a great deal of news, but the news that is out is predominantly focused, or the major news I should say, is focused around the Australian dollar. Last night we had the monetary policy meeting minutes. Now, what came from that was that the RBA are content with where the Australian dollar is currently and how their economy is growing. However, what has been the biggest booster to their economy also is their biggest threat. And what they're saying is that although the US and China, in the way that their numbers have been growing and developing, there's certain political risks and economical risks within both of those major economies that could actually bring global crisis or issues, not just to Australia but around the world. And what that is US with their trade restrictions and immigration policy, and with China their effectively the amount of debt that they're buying in relation to their GDP, they're buying twice as much debt as they're growing, which has been how they've expanded it massively as an economy, but it's also their largest risk right now. So both of these things, one of those could actually swing major global implications, but if both were to react at the same time, then we could have huge issues, and that's what the governor of the RBA was saying. So although the Australian economy is rather upbeat and things seem to be progressing quite well, I think the market has seen it as a little bit of a disappointment, judging by the way that the Australian dollar's moved. But I would say that more than anything, that it's been a dollar bull night. I mean, the dollar literally moved since 10 p.m. last night. Literally, it's been dollar buying, as we can see in the dollar index. Look at the dollar index here on the daily. We've got a nice big gap up, and this morning it's pushing up higher. What we were anticipating last week was potentially the head and shoulders that was forming. It did push down. Then we've had an inside buyer day and then a gap up. So we might test this shoulder again, but it's looking more likely that we're going to see a break through this and a continue to the upside, which, to be fair, that would be something that here at Phoenix Blue we would prefer. Primarily, the reason we prefer that is because it agrees with our fundamental bias. You know, the U.S. economy planning 3 rate hikes, and one of the members last night mentioned that a March rate hike still isn't off the cards yet, so it's not off the table. So if we see that, we'll see a resurgence of dollar bulls, and I think maybe that's what we're going to see coming into the back end of February, early part of March, especially if we get some good numbers. So watch to see how this plays out. Remember, don't get involved in any trades unnecessarily. Euro dollar, so what we saw last week, we saw Euro move up quite nicely from what we saw after it broke out the rising wedge. Then it came back up into this area here, 106.75, which was a 50% retracement of this leg down, and since then it's reacted beautifully to that. Unfortunately for myself and our team here, there wasn't enough structure when you look left to be getting involved in this trade short. However, intraday trading, it looks like it's a dollar bull day today, so look to be taking positions with the dollar, but make sure you do it on retracements. Dollar yen, well, got a couple of positions here. One was an end of day position, which was just very, very simple. We highlighted the falling wedge last week. We've had a nice clean breakout. We've had a retest and then a solid move down, followed by some indecision, and then we just bought on the break of the high. Very simple trading. You know, first targets have got to be 115 on this, and if we can break through 115, we'll look to add in and run it up to 120. But ultimately, I think safe and sorry would be 115 targets, and see what happens at the 115 to 115.15, 115.50 area. Uh, Rather annoying chart here with sterling for us yesterday. We're trading this triangle pattern. The market came right into the trend line. Usually, I find that we get a little push through, and we got an order sat there waiting, which it missed by a few points, only to come down and effectively what would have taken us very close to target. Now, if we'd have been in this trade, you can see how close it came to this lower trend line. We'd have actually closed this manually, because when you set the target initially, you're setting it when the trade is set, and at the time the trend line would be somewhere down here, and then I'd be constantly adjusting the target as we get closer into the apex. Okay, Australian dollar. Well, this is the weekly chart. I mean, you can't really see a great deal on this weekly chart in terms of what happened overnight and this morning, but you can see that the weekly candle, it just looks like a mere speck right now. But the reason I'm showing you this is for the structure above. So the structure above here, which is at 77.30, and then we've got the big number in at 78.50, the 61.8 retracement. Now, this grey zone is what I'm really interested in. This is where we're looking. Selling the Australian dollar, it's got to meet our rules. Unfortunately, it just didn't quite create our entry up here. So now we've got to wait for another push up or a movement and a change of cycles to get in on the way down. Any break above 78.45, and then we're going to have serious dollar strength up to Aussie dollar strength, that is, up to about 9,500. So you've got about a 1,700 point return available if we get through this area. So the reward is definitely to the upside. To the downside from here, you're talking maybe 7,100s, but I'd be looking to take some money off around the 75s flat, which is a couple hundred points initially. We'll see how the market reacts to that trend line. Gold, well, interestingly, it's still sticking within this channel. Our key number that we're watching here is $1,250, but a break below sort of 1,214, which is this blue line here. So a break below here, and then we'll be looking to get short in around the $1,210 to $1,215. That's providing we get the US dollar strength. We should see a decline in gold. So finally, we've got cocoa. Cocoa, this has been a market we've been stalking for many weeks and months now. Interestingly, we got our reaction that we wanted off the 1850, 1890 level. The downside we've got here is, although it came in and it moved beautifully last Thursday and Friday, yesterday it was closed, but so Thursday, Friday, yesterday was closed, and we saw this sell-off on Friday. What would have been nice is if we actually got a break through this trend line. You can see the trend line, we've got some really nice clean touches. 1, 2, 3, false break to the upside, back in, 4, 5, 6. So you can see those highlighted there, and again it's touched it again. Now, I'm going to watch this market very closely, because the downside that we've had here, and I've been putting this in the Investor Insight pack, and I've also been talking about it on the morning updates, is that although the commercials are aggressively buying cocoa, this is a commitment of traders signal, by the way, guys, so it's a COT signal. Although they're buying it very, very aggressively, they're also covering their longs with a lot of shorts. So the shorts are extremely high as well. We did see a slight tick down the last 2 weeks in the number of short contracts that they hold. I would like to have seen a few more. The positive side that we do have to this now is that the commercials are actually net long, and if we were to look back in history, when the commercials are net long, you get a significant rally for a period of time. So I'm still standing with this position. Our stops are strictly behind structure, and it's a matter now of just sit and wait and let the chart play out. You know, we can predict the way the market's going to go, but we can never predict the path that it's going to take from, if we say it's going to go from here to here, well, we could be ultimately right, but the question is, how does it get there? and that's where trade management comes in hand. And these are the times where you get a little bit annoyed because your trade management gets you stopped out by 1 point, 2 points, or 5 points, and then the market runs off and hits your target. Well, you can't get disappointed by that. Yes, your analysis was great, but remember, at the end of the day, you've got to be disciplined with risk management and trade management. You can't be chopping and changing all the time. You do that, there'll be no consistency to your trading. Therefore, your results, you can't monitor them, and you can't correct where you might be making mistakes because all of your trading will be inconsistent. Okay, the only way to improve is by having a consistent manner the entire time, and then you can look at your results and say, right, well, this didn't work, this didn't work. Right, okay, now we can take that out. So, a couple of things I've touched on there is consistency, rules-based, trade management, risk management. If you aren't doing these things and you aren't doing it consistently, what you really need to do is you need to get in touch with Phoenix Blue, or you need to get in touch with someone that actually trades consistently and trades a lot, and see if you can work with these people, see if you can work with them and get close and try and understand how they do it, and apply yourself. The only way to improve is by working with people that are better than you, and they do it for a profession. All right, guys. Well, listen, that's the end of our morning update today. So one quick thing is we've got our next trading event, which is next March, Wednesday, the 15th of March. Now, if you do want to register for this event, the best way to do it is by going to phoenixbluetrading.eventbrite.co.uk, or you can email us on info@phoenixblue.co.uk, and we'll send you a link out. Okay, guys, have a great trading day. Watch out for some of the news today. We've got the Australian governor speaking tonight, 9:30 GMT. I'm sure he's just going to reiterate what was in the minutes this morning. And then we've also got the GDT, which is the dairy price, auction prices. So this is going to affect the New Zealand dollar more than anything. And last but not least, we've got the inflation report coming out from sterling. So watch out for that. There could be some huge swings in sterling today. Okay, all the best. Bye-bye. See you tomorrow.